Changing gears a bit, and with the current tightness in credit conditions, it's a good time to talk about innovative ways that businesses can access funds. Active International is a global leader in what is called corporate trade, which allows companies to use their assets to pay, in part, for a wide range of marketing and business solutions. To explain to us exactly what corporate trade is and how the company works, we spoke with Fuest from Active International and began by asking him to explain the company's unusual business model.
What we do is we help companies that have underperforming assets. When I say underperforming assets, I'm talking about things like excess inventory that's lost value, real estate properties, capital equipment, and even in some cases, bad debt. And what Active will do is we will buy these underperforming assets at a multiple of what the market value really is, generally 2 to 3 times the value of the asset in the marketplace. We are able to do this because we pay for the asset with what we call a trade credit. And once the company has acquired this trade credit at a multiple of the actual market value of the asset, they can spend that credit back with Active to acquire goods and services that they would have had to pay 100% cash for in the past. So, for example, we will buy an asset that is at 30 or 40% of the value that the client really wanted to receive. We'll pay the full value. Active will sell that asset in an approved channel that the company allows Active to sell it in. And that's how we make our money. We sell the asset at the fair market value. The client now has a credit with Active that is far in excess of that. And over the next year or 2 or even 3 years, they will spend that credit to partially pay for goods and services, particularly media and advertising, that they would have had to pay 100% cash.
How do you actually put a value on those depreciating assets?
Generally, we look to see what the asset will bring in the marketplace. And our commitment is to offer 2.5 to 3 times the existing market value. Very often, that works out to be equivalent to the original book value or to the wholesale value. So in many cases, we're able to restore the full value to the asset.
And that's how you make your money in that?
Well, once we have bought the asset with a trade credit, we are the owners of an asset, just as any other buyer would have been, although we're able to pay much more than the normal buyer. We sell that asset, and that's how we make our income.
But they've got to use that credit that you give them directly with you.
Yes,
you're purchasing for them other assets.
Exactly. The way the asset will restore its value is through the use of that credit with Active over a period of time. And we will actually size the transaction so that we are sure that the client can use those credits with us in a reasonable period of time. Generally, we target to restore the value within 1 to 2 years.
How difficult is it to balance those two competing objectives? Because you've got part of the business which has bought those assets. Part of them is then finding new assets for the client. I mean, have you got two separate parts of the business?
The real key to our business is our ability to create leverage in the marketplace. So we, for example, work with many of the media across Australia and around the world. And through investment and trading with them, we're able to have a preferred cost in these various mediums. And it's our leverage, it's our reduced cost that allows us to transfer that favored cost to restore the value to the client's
Must be quite a cyclical sort of business then, some big lag periods, is it?
Well, it's an interesting business because, right now we're going through some difficult economic times, particularly in the United States, and I'm responsible for Active's business on a global basis. And as I travel the world, I see the effects of the U.S. economy spreading rapidly into other markets. And what that means is that retail sales are going down, inventories are backing up at the manufacturers. And this is where Active can be of the most service to the business community. Because as those assets build up and the values decline, we're able to take those assets, restore value, and provide the services that we have developed leveraged positions.
So as a coal-face example, you could take something like the very cameras that are filming all of this, potentially. You could find a new buyer for those, and you could give this company credits to go and get new HDTV grade cameras.
Absolutely. If you needed new cameras and the value had declined...
Can I trade in my co-presenter and get another? No.
You want a better model. All right, how fickle. How fickle.
I mean, it is interesting because we deal in all types of assets, from food to beer to electronics to automobiles.
Potentially, one can imagine that you could even deal in superannuation. You talk about declining assets. Here we've seen people's super out there losing a lot of value. They're pegged to tangible assets. Why not?
Well, that could be an item we would purchase. As I said, we purchase bad debt and other financial vehicles that have lost value. As long as there is a market at some value, we can take it, increase the value, and gain the original value for ourselves.
So you actually think that you might be benefiting from this sort of harder economic times that we might be going to, and you think your clients obviously can benefit at this time,
yes,
as opposed to, say,
well,
a year ago?
we are in an interesting business because as the economy turns down and people have problems with business, with sales, and with inventory, we are there to actually protect them from the losses that could occur. Indeed, Active's business performs well in bad times because we're there to help in bad times. But we have found over the 24 years that Active has been in business that through bad times and good times, it makes sense to restore value to any assets that have lost
How
value.
profitable are you?
Well, we're quite profitable because when we buy the asset for trade credit, we sell that asset for 100% cash. Now, it makes a lot of profit, but that is the money that we take and reinvest to obtain the goods and the services that we're able to provide for the value of a trade credit.
How big a business is it in that? How many other competitors do you have?
It varies around the world. We operate in 17 countries. The company was founded in New York in 1984, and our turnover last year was about $1.5 billion on a global basis.
So you're IPO? You're on the market?
Not on the market. We're a privately held company at this point.
No plans to take a public?
Not at this time.
Right.
Our owners, I think, are very happy maintaining a private position. But we are in 17 countries, and it varies from country to country. Most countries we have one or two competitors, but no competitor compares in the size, the scope, and the global aspect of Active International.